The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and welcome to InvestorExpos show for May 13th. My name is Anna, and I'll be your host today. We're having a great lineup of 4 speakers for you. Michael Valtos, Bryce Headley, Courtney Smith, and Barry Burns. This session will be recorded and sent to your email. I would like to begin and bring to the show our first guest, Michael Valtos. Good
Hi,
morning,
Anna.
Michael.
Hi, Anna. Let me just get my screen up here. Okay. All right. Let me know if you can see my screen and hear me okay.
Screen looks great. You have 45 minutes.
Okay, great. Thanks, Anna. Good morning, everybody, and welcome to today's InvestorExpos free training presentation. We got 4 great speakers today. I always love catching the other speakers because, I also like to pick up, new things that I can incorporate into my trading. And, today what I'm going to be talking about is trade setups based on the order flow that you can use and add to your trading. And, what you're going to learn today is the important parts of order flow. Order flow is really a lot of information for a trader to digest. And I think that's one of the reasons why a lot of traders shy away from order flows because, they see a lot of numbers and markets moving pretty fast sometimes. And, they just feel overwhelmed. But I'm going to show you how to concentrate on the pieces of order flow that really matter and how you can incorporate it into your trading. Then I'm going to talk about how to put those different pieces together, right? Because, it's one thing to have a puzzle piece, but you need to know where it fits in the whole puzzle. Okay, so that's, not just having the piece of information, but how to apply it to the market. And lastly, I want to talk about a couple of order flow trade setups that you can use right away. And, whether doesn't matter which order flow software you use, you should be able to use the information that I'm giving you today and apply it to the markets as long as you have a way to, most software now, I think Trade8 just released a footprint chart this past week, but most major trading platforms now offer an order flow footprint chart so you can read the order flow as it's coming in. So just really quick, those that are new to one of my presentations, just, quick, briefly who I am. My name is Michael Valtos, and, I've been running this company Orderflows.com for the last 5 or 6 years. I started in 2015, I think, so, we're coming up on the 6-year anniversary later this year. And before that, I spent 8 years at JP Morgan as Vice President of Futures Trading. I ran a trading desk at Cargill for 4 years. I was at Commerzbank. I was the licensed Eurex trader there for 3 years. For 2 years, I worked at EDF Man on their global macro trading desk. And I started on the CME floor with Dean Witter back in the early 90s. And eventually I left the trading floor to work on their upstairs trading desk when electronic trading was starting to basically take hold in the industry. So I've literally been there from, not the very beginning, but, from its infancy when the exchanges started moving electronic, and I've been trading electronic ever since. Now, like I said, in 2015, I started my company Orderflows.com, and we have a software, right? It's called the Orderflows Trader, and it runs on NinjaTrader 8. And what it is, it's a volume footprint chart that allows you to read the order flow, and it's got 17 pre-programmed order flow indicators. The reason why this is called Orderflows Trader 3.0 is because this is the 3rd version since the original version in 2015. We upgrade it about every 2 years. So the last one was in 2018, and we just did a big upgrade back in last year, back in August of 2020. And it's just fascinating how you can use software nowadays to help you as a trader understand what's happening in the order flow. And, the reason I just bring this up is because, I want you to understand the charts that I'm using in this presentation are generated from my Orderflows Trader software, in case you were wondering. Now, before starting this Orderflows.com, I started writing a book on trading order flow because up until that time, back in the, the mid in the teens, 2013, 2014, there was very little information for traders on how to read the order flow. And, I had been trading with order flow for, a long time. I don't want to say decades, but, a long time. And there's a lot of things that traders just don't know about order flow. And that's why I started writing this book. And as I was writing the book, I realized, why is the software available so basic, right? Why can't it do some of this analysis that I'm writing about in my book, the things that I'm looking for in the order flow? And that's how the Orderflows Trader came about. Now, if you stick around to the end, I'm going to show you how to get a copy of my book for free. It's the PDF version. It's not the hardcover copy version. It's 150 pages. It's a good reading. I even people hit me up on LinkedIn and stuff like that and say, hey, you know what? I've read your book. It's really helped my trading. So, it's a very useful tool for a lot of traders. Now, before I dive in, just a brief disclaimer, do understand trading involves risk and you should only trade with money that you can afford to lose, right? I don't want you thinking that it's all, sunflowers and roses. Trading is work. It's not something that is meant for everybody, but if you become good at trading, you could have a fantastic lifestyle. So the first part I'll talk about is the important parts of order flow. Now, most traders, right, we look at a normal bar chart, okay, but the order flow footprint chart takes that information that you see on your bar chart, but adds in more information, okay? So remember, everything that you see on a chart, whether it's a bar chart or a footprint chart, comes from the same source. It comes from what's traded in the market. And the basic way to look at what's traded in the market is by looking at the time and sales. Okay, but the problem is with looking at time and sales, it's moving so fast that you can't see what's trading. Some people now like to trade on the DOM, the price ladder. But again, the problem with that is you're just seeing what the bids and offers are in the market. You're not necessarily seeing and keeping track of what's being traded. And what's being traded is very important information. Now, the footprint chart takes all that information and puts it into an easy to read format. Okay. And out of all that data, right, you see on the screen a lot of information, but there's three main points that order flow traders focus on. And that is the delta, that's the point of control, and that's the imbalances in a bar, right? Every bar is going to have a delta. Every bar is going to have a point of control. Point of control is, the place with the most volume, and imbalances. Not every bar has them, but bars that have them can be very revealing as a trader. So just really quick, what is delta? It's the difference between aggressive buyers and aggressive sellers in a bar. Now, delta is important so you know who's dominating the current market as shown in the bar, right? Think of it this way, right? Anytime someone buys at the market, right, that's delta means +1. If someone sells at the market, that's delta -1, right? Negative delta. So when you take the difference between the volume traded on the offer versus the volume traded on the bid, you have the delta. And delta, on most software is at the bottom of the chart. Some people like to have it printed, above the bar or below the bar. I just find it easier for me to have it along the bottom, right? Again, some people have it printed above or below the bars, but I like to keep it in the same spot rather than having to, so I know where it is, basically. But generally, as you see, as the market is selling off, as it's going down, you have negative delta, right? Generally, as the market is rising, you're going to have positive delta, right? You can see the positive, the green boxes down here on the bottom is the positive delta. Now, there's other pieces of delta. There's max delta, min delta, and cumulative delta. Unfortunately, I don't have time to get into all that right now. But, if you go to my YouTube channel, I've got a lot of information on that, how to use that. So the next important piece of market data that's generated from the time and sales and put on the order flow chart is the point of control, right? And the point of control in a bar is the price level with the most volume. Now, there's no fancy mathematical formula to determine it other than simple arithmetic, right? You're looking at the volume that was traded on the bid at a price, the volume traded on the offer at that same price. And if that price level has the most volume in your bar, whether you're using a minute-based bar or volume-based or tick-based or, whatever you're forming whatever way you're forming your bar, there's always going to be one price level with the most volume, and that is your point of control, right? And on a footprint chart, you're going to see there's a box, like not a box, a rectangle put around those price levels. Every bar has one. I've highlighted a few in here. Whether it's an up bar or down bar, it's going to have one. Now, I have this one highlighted in yellow as opposed to blue because, this is a special one. Okay, this is a special point of control. So every bar has a point of control, but not every point of control is going to matter, right? There's going to be certain points of control that are bullish, indicating support, or bearish, indicating resistance. This is a bullish one. That's why it's colored light blue in the box as opposed to gray. Now, the next important piece of information on trading order flow is imbalances. Understanding when there's a market imbalance occurring. And basically what it is when there are more aggressive buyers than sellers, or vice versa, more aggressive sellers than buyers, but this time in the two-way auction, right? The point of control measures volume at a price. The imbalances measure the volume, but in the two-way auction, right? Two-way auction is the market is bid at one price, offered at another. So it's like 5 bid at 6. Okay, so say there's 5 bid for 10 contracts, there's 20 offered at 6, one contract trades at 5, but 8 trade at 6. You have a buying imbalance because you have more buyers than sellers. So how do you define an imbalance? Well, a buying imbalance occurs when there's at least 4 times as many traders buying the offer than traders selling the bid, right? And a selling imbalance is the opposite. It occurs when there is at least 4 times as many traders selling the bid than traders buying the offer. Now, again, the 4 times as many, you can adjust that. I know some traders that use 3 times as many, 300%. I know some traders that use 5 times, 500%. I even know some traders that use 10 times, 1,000%. But 400%, 4 to 1, is about, sort of the industry standard. And again, in the footprint chart, not every bar is going to have imbalances, right? And the ones that do, it's going to be highlighted, right? Buying imbalances are blue color, right? You can see the blue ones in these bars. Selling imbalances are red color in the bar, right? If it's just normal order flow, it's just a black number inside the bar, okay? Because remember, right, markets exist to facilitate trade, right? For people to transfer risk from themselves to somebody else, or people to take on a risk. But when you have an imbalance of buyers versus sellers, that's important information. It's telling you, people are happy to either take on the risk, or people want to transfer the risk. Think of it this way. If people think that they are buying something at a very low price, they're going to be aggressive, right? And you often see buying imbalances, right? Because everyone's thinking, oh my gosh, this is such a good price, I got to buy more, right? So you're going to have an imbalance until the market starts moving up, and then it finds balance again, right? The markets move from balance into a different phase called imbalance, and back to balance, right? That's why markets go up and down. It's trying to find balance. Now, generally speaking, as markets rise, you see buying imbalances, right? Why? It's because aggressive buyers are lifting the best offer and looking for the next best offer. Demand is present. Generally, again, I say generally because it's not always the case. I mean, markets do go up on negative, on selling imbalances, but that means something else, okay? But generally, as a market falls, you see selling imbalances. Aggressive sellers are selling into the best bid and looking for the next best bid to sell into. Supply is present. Now, like I just said, just a quick caveat. I say generally because, as the market's going up, right, there's a lot of demand. So people are lifting the offer. They're buying it, because they think prices are going higher. But sometimes you do see selling imbalances in a market that's moving up. Why? Is because somebody is there absorbing the selling that's going on. Might be a lot of selling, but there's a big buyer, a big passive buyer who wants to buy a lot but doesn't want to move the market higher. So he's there happy to absorb that as the market is going up. He just keeps raising his bid. Sellers come in, hit those bids. thinking that, oh, price is too high, but that buyer is very important, right? And that's, some of the nuances that I get into in some of my advanced trainings and things like that, as a trader, you can understand, you really get a good grasp of what's happening in the market. Okay, so now that you know what point of control, delta, imbalances are, let's start to put those pieces together, right? Because, it's one thing to have that bit of information, but again, you got to know how to use it, right? And when you look at a normal bar chart, this is a candlestick chart, what do you see? You just see you see where it opens, what the high, the low, the closes. Candlesticks are, very visual, right? People like to look for patterns in candlesticks. And, I gravitated to candlesticks when I first started trading back in the late 80s, early 90s. That's sort of when candlesticks started becoming popular. Prior to then, people would just use a normal open, high, low, close bar. And, I was always fascinated on why some bars, look the way they do, or why a market would pull back right to a particular level or rally up to a level. And it wasn't until I started reading the order flow that I understood why this market would rally back right up to this level, stop, and then sell off, right? Then the market would put in the swing low, rally up, come right back down towards that swing low and bounce off of it, right? Because by understanding what's happening in the order flow, I could see if there's market generated resistance or market generated support, or if we're breaking through support, why, what's the aggressive selling look like? Why do some candles have these big wicks, right? And because a lot of traders, they like to look for these candles with the big wicks, but understanding what happens in those wicks is also going to give you very, very tradable information. Now, this is what an order flow trader sees, right? Someone that's reading the order flow is going to understand why this market started selling off from here, right, at 41.05, right? This is the area right over here. We hit this low, we rallied back up. Why is it stopping here and then selling off? Okay, but if you're reading the order flow and you understand things like points of control, you would understand that this is a very bearish point of control. And I'm going to explain a little bit later what else is going on in this bar and this bar as well that is keying off a potential bearish signal, right? But if you're just looking at reading, the normal candlestick chart, you don't know yet, because you're just going sideways, right? You're just hanging around sideways in this little area in here between 4100, 4105. It looks like it's just going sideways. And as a trader, you want to know, are we going to go back up, test 15, or go back down and, test 95? But again, if you understand how to read the order flow in here, it gives you very revealing clues. And I'm going to explain those in a minute. Now, what's the difference between a normal bar chart, candlestick chart, and an order flow footprint chart is, well, the normal bar chart, the information you get is the open, high, low, close, and if you want, the volume for the bar. Okay, that's okay. That's a starting point, but why limit yourself to that? And a footprint chart is going to also give you the open, high, low, close, and the volume for the bar, but it's also going to tell you the volume that traded on the bid, the volume traded on the offer, what the delta was, the difference between aggressive buying and aggressive selling in the bar, who was in control. It's also going to give you max delta and min delta, right? Max delta is how strong the buying was in a bar. Min delta is how strong the selling was in a bar. And there's trade setups you can take based on what you're seeing develop in the max and min delta. Now you also have cumulative delta. Okay, cumulative delta is the running delta total for the whole day starting from the beginning of the session. Okay, and obviously, when delta is cumulative delta, you're coming into, a certain time of the day, 10 o'clock, and you have a big, strong positive delta, it gives you an idea, the market is pretty strong, right? If, it's 10 o'clock in the day and delta is kind of mixed, hovering around zero, then, the market has got very little direction, right? Or if it's a big negative cumulative delta, the market is weak. Now you also have imbalances in the bars, okay? And again, I've explained, what that is you have more aggressive buyers than sellers. or more aggressive sellers than buyers. Now you also have the point of control, okay, which is, again, the place with the price with the most volume in the bar. And more importantly, now in the latest version of Orderflows Trader, you have the value area. So you know the value area high, the value area low, okay? And that's also a very important piece of information. If you've ever studied market profile, it's based on understanding where value is. And you could even take it down now to a smaller level and understand where value is in a bar. Okay, so it's going to give you an even clearer picture of the direction of the market, right? Because when you look at market profile, you just look at the value area for the day and maybe the value area for the previous day and where we are in relationship to it. But if you're trading intraday and you can see how price is reacting around current value, either the current bar that you're in or the last couple of bars, it's going to help you with understand the direction of the market right now. So having more information is one thing, right? You have to know how to use it and apply it, right? You don't want to be drinking out of the fire hose because you're just going to be flooded, right? But when I was growing up, right, the show MacGyver, right? We all remember MacGyver, right? The guy would take a paper clip and save the world, right? He would defuse a bomb with a paper clip, or he would start a car with a paper clip. You do all these things with a paper clip, and order flow is that paper clip. It gives you a tool that, if you know how to use it, you can interpret what is happening in the market, right? Sometimes, the quote, I love this quote, right? A paperclip can be a wondrous thing. More times than I can remember, one of these has gotten me out of a tight spot. And order flow is the same way. By understanding what's happening in the market, right? It's not, people think that, I have to have some fancy algo to understand what's happening in the market. You don't, right? You just need to read what's happening in the market the same way you would read what's, a story in a book, right? Again, your normal candlestick chart, if you're looking at it, it's difficult for a lot of people that they'll just look at it and say, this was a great sell-off, right? You can see all these red candles. Well, as a trader, right, when it's trading up in here, right, up here, you don't know it's going to put in all these red candles. You don't know if it's going to put in all green candles, right? It's nice to look after the fact and say, oh, that was so obvious. You got this inside bar, then you got this and this happening, that it's trading is easy. Well, it's not, right? Because as much as we'd like to look at it after the fact and, armchair quarterback it, when you're a trader and you have to make this decision, you want to be able to make the decision with current information as what's trading right now. Okay. Just as this big sell-off here, right? You want to be able to get short as quickly as possible. You don't want to wait till the market, people say, well, yeah, it was a great short. You see it broke the swing low. Well, where would you rather be getting short at? 90 down here when it breaks the swing low, or up here at 98, as it starts moving away from this swing high, right? This is your profit potential. Even though this is a nice profit here, where would you rather be getting in? Down here or up here, right? If you understand what's happening in the order flow, you can understand that this market is turning, right? And get in earlier, right? If you're getting short down here, where's your stop? Heaven forbid it's up here at the swing high 10 points away. If it's at the swing high, you're better off getting short up here at 98, just risking, 2 or 3 points rather than risking 3 times as much, 10 points. So again, this was your normal order flow chart, right? And I was talking about some of this information earlier, right? Points of control, right? Imbalances, right? What's happening in the delta, okay? So as a trader, you want to identify key areas, right? And this is where having good software is going to come in, right? Your software should help you identify those areas, so it leaves some of the decision making of just, should I take this trade or not take this trade, rather than trying to determine, is this point of control important, right? And this point of control here is important. That is right here. That's happening right here. You got a very bearish point of control happening in this bar, okay? But again, you're not going to know if you're looking at a candlestick chart that that's important, because you don't know where the point of control is on the bar. Let software identify it for you. Now, the other thing you can start looking at is the delta. What's happening in the delta? Okay, well, you see delta in this bar is 2. That's nothing. You know, most of us trade 2, 3, 4, 5 contracts at a time. We could, this delta could easily be negative. Okay, but it's 2, so it's positive 2. Now with delta, I use a certain buffer. I use in the E-minis 50 delta. If it's within 50, then it's basically neutral. Okay, but 2 is basically neutral. Then over here you got a 0, a 7. Here you got a strong delta of 321. So delta is mostly neutral here. Okay, you got 3 of these 4 bars with basically very, very small delta, 0, 7, and 2. But then we got a bar with a bearish signal in the point of control, indicating market resistance up here. Then the next bar, a big negative delta, 476, okay, followed by another bar with big negative delta, minus 467. Now, what else do we see? Well, we're seeing 1 selling imbalance here, 2 in this bar, 2 in this bar. Okay, so you're starting to put the pieces together, right? You've got selling imbalances, you got resistance based on the order flow, right? In the bearish point of control, that's why it's colored magenta, right? You got small deltas, then the deltas turn negative, right? A strong negative. So you're starting to put those pieces together and understanding what's happening in the market. Now, the next thing I'll talk about is the value areas of the bar, right? And you can see these bigger boxes around a bar, right? That's the value area. So I know that's the value area high. This is the value area low, just as this is the value area high. This is the value area low. This is the value area low. This is the value area high. Okay, but what else do we got? Well, we've got a gap, right? We got a gap in the value area from the value area low here to the value area high here. Okay, then the market tried to come back up. It rallied 2 ticks from where it opened, couldn't even close that gap, right? Then the market started trading down, then down, down, down. So you got a gap in the value area, right? Most of us are familiar with gap theory and how to trade it, especially when it comes to value areas on the market profile. And you're just taking sort of the same concepts that you're seeing in market profile, but you're able to apply them on a smaller time frame, right? But you're also adding in what's happening in the delta, what's happening with imbalances, and with points of control. Okay, now this is one of the tools that we have added in the new version of Orderflows Trader is what we call slingshot POC, which is bearish or bullish POCs, extremely bullish, extremely bearish, right? This is a resistance POC, but what we have is we will draw in on the POCs that are bullish or bearish, right? Here you had a bullish one. Yeah, market sort of went up, but then it ran into resistance, right? It ran into this bearish POC. Then as we gap down in the value area, another gap down in the value area. Now we're starting to see some extremely bearish POCs. That's why they're colored red. If they were bullish, they would be colored green. And you could catch this move down. So remember, right, for a market to move in the direction you expect it to, there needs to be follow through order flow in the direction you expect the market to move, right? And, we often talk about taking trades in context. You hear that a lot. You get trade in context of the market. Well, what is context of the market is understanding the market structure. Would you be looking to buy after the market just rallied 10 points, or would you be looking to sell when you have bearish information coming in after a market rally 10 points? I find the better trades are the ones that happen around turns, because it's going to give you bigger profit potential in the sense that bearish information is coming into the market. So, without the follow through order flow, right? Again, it's not just about having, I've got a bearish signal here. You need to see the next bar follow through, right? You need to see the next bar follow through. Just like here, right? You've got a bullish signal, then you got some buying imbalances, but you got no follow through here. Okay. Instead, you're seeing the negative order flow come in. So even if you're getting long in here, the fact that you're seeing negative POC, negative value area moves, you're seeing negative delta, to get out of this trade. You don't need to let it go stop you out. Even if you got long, at 04 and you have a stop, at 4,100, you don't need it to come all the way down in here. As soon as you see this negative information, you could manage your trade, right? You could get out at a smaller loss. That's the beauty of order flow, is when you start noticing the opposite flow coming into your current position, you can get out, right? Because what causes the market to move is the buying and selling. It's not your indicator, right? It says, well, my indicator flashed, so everyone should be buying. No, it's just you, or whoever's using that indicator sees that. Order flow is made up of all the traders that are trading in the market right now. That's why the markets move, is because the actual buying and selling that's taking place in the market right now. Again, this is yesterday, right? Market sold off. It got down to 70 and a quarter. Then we started to rally. Okay. Well, what do you see, right? If you're an order flow trader, right, you can start seeing this information, right? You can start seeing the selling imbalances, the strong negative delta as you're going down, right? Then you hit the low, then you got positive delta, right? You got a divergence. Price made a new low, but you got buying coming in, right? Positive delta, that's a divergence. Next bar, you're seeing buying imbalances coming in, right? You don't see any buying imbalances really on the way down. You see one, but that's it. But now all of a sudden you hit this new low and you're starting to see aggressive buying coming in. What are you starting to think? Well, maybe buyers are coming in at these low prices, right? Price, there's a saying, price is an advertising mechanism. Well, if it gets low enough, you're going to attract people to the market to buy at these levels, right? Just like Bitcoin, right? When it gets down to a certain level, people love to buy it, right? Whether it's Bitcoin or a stock, or whether it's, groceries, things that you would normally buy. If it's on sale, you might not need it right now, but it's such a good price, you're going to buy it, right? You're going to be aggressive. And then you start seeing the deltas go from negative to positive, right? Now you're starting to see points of controls move higher, right? Which is also bullish. And, I'll be honest, one of the toughest trades to take is buying off the low of the day or selling off the high of the day. But when you're using order flow, when you start to add value areas into it, right, you get a better picture, right? As the market's moving down, you're seeing value move down. Now the market's starting to move up, right? Value gap, right? Market's moving up. Value higher. Value area high is higher. Value area low is higher. Right, we're starting to make that move back up. A nice quick move for 10, 15 points. So let's get into the good stuff, right? The order flow trade setups. I'm going to discuss two of them today. And the first one is multiple buying imbalances off a low, swing low. It doesn't have to be the low of the day, or selling imbalances off a swing high or a high of the day. So, again, I just pulled up these charts from yesterday. Just to keep it current. And here we are. This red line is the low of the day. And you're seeing, a couple green bars. Well, here's a green bar. This one's a red bar followed by a green bar. Now, again, if you're looking at the order flow, again, it doesn't matter if you're using other software out there. Like I said, a lot of software now has this type of chart for you. Okay, so you might as well start getting used to it, right? Don't not use this information. If someone says, hey, you know what, I could tell you, when aggressive buyers are coming into the market, would you be interested? Yeah, right. And it's all it is just putting this chart on your screen. You can still have your candlesticks, you can still run your normal indicators on top of it, but it's always nice to see where the aggressive trading is coming in. So if you're looking at this, I like looking at lows for buying opportunities if they're there. I'm not trying to pick a low. I'm just watching the market make the low and saying, hey, you know what, is there a chance to buy here? And I see here, 1, 2, 3, 4 buying imbalances. Okay, the market go up. Yeah, the next bar went up a little bit, but then just went sideways. Okay, that happens. We've all gotten into trades and the market goes sideways. Then we came down here, poked down, made a new low by a point, then boom, snap right back up. You got another bar with 1, 2, 3 buying imbalances. Now over here, you have two bars that have stacked buying imbalances, 1 and 2, right here. Okay, and this is how most order flow traders look for imbalances. They look for stacked imbalances. But what I'm trying to impress upon you today is they don't need to be stacked on top of each other. They just need to be in the bar, right? Now this bar here has got 3 selling imbalances. But again, do you really want to be getting short? I mean, can the market go lower? Yeah, it can, right? This market went lower here by a point, then it went lower again by a point. You could say, well, yeah, the market went lower but did it? It only went a point lower, whereas this rally, was 7 points, right? Would you rather try and short for an extra point or buy a rally of 7 points? Think about it, do the math. 7 is better than 1. Okay. Now, if you're using normal software, you can just see that visually, right? You can see those imbalances. But one of the things that we have in the Orderflows Trader software is the ability to highlight to you where these bars with the multiple imbalances are. Here. Now it's also showing you the bar with the selling imbalances, right? This one here got 1, 2, 3 selling imbalances. But again, do you really want to be getting short at the low of the day, or would you rather have us for the same reason, just in the opposite direction, to get long off the low of the day, right? Me personally, I'd rather get long off the low of the day than go short into the low of the day. Of course, the market can go lower, but I just find better trades at the lows of the day if it's given me a reason, right? I'm not trying to pick the low. I'm just saying, oh, there's aggressive buying coming in. It's not till you get to these bars that it really starts to show up. But where would you rather be getting long? Off of this bar or off these bars up here, right? It gives you a better entry a little bit earlier. Okay. Now this is the one I was showing you earlier, right? We came down here quite, market's coming down hot, right? And then just boom, snaps back up, right? And what do you see, right? You see 1 buying imbalance, and then this next bar with 3 buying imbalances. They're not stacked neatly on top of each other. You got 1 down here, then 2 here, all right? And then the market rallies from, whatever this is, 75 all the way up to almost 85, quick 10-point rally, right? Then people will say, well, they're selling a stacked selling imbalance in here. Isn't that bearish? Well, if it holds, yeah, if I was long off this bar with multiple buying imbalances and I got a stacked selling imbalance coming in, I want to monitor it, right? I want to see if this is going to hold or not. Well, it didn't hold. It immediately failed. Okay, so that's good. And the market continued in that direction. But again, you want to be able to be highlighted when these bars with multiple imbalances are appearing right here, right? If you're just looking at this, you might miss it, right? Use software that's going to highlight that to you so you don't miss those. Now, the next one is the value area gap, right? And this is sort of, a carryover from market profile, right? And it occurs when a bar opens outside the previous bar's value area and does not trade back into it, instead trades away from it and forms a gap from one value area to the current value area. You go in that direction. So basically, this is that chart I was showing you earlier. Would you short here, right? Some people would, some people wouldn't. But when you start looking at the value areas, right here, you got that big gap in the value area, right? Would you get short here, right? Market's starting to rally, right? You're seeing stacked buying imbalances. You're seeing multiple buying imbalances here. You're seeing positive delta. Then it just sort of stops here. So if you're long, right? If you're long from down here, right? You're thinking, oh, happy days, we're starting to rally, right? Then what happens? The market falls over. Okay, this is where having a tool, looking at the value area is going to help you. You got this big gap here, right? Some people say, oh, it's just getting this little pullback, then it's going to start rallying up again. But it can't even cover this gap, right? It's just, you see this over and over, right? When you start looking at value areas in the bars, you see these gaps over and over, and you I don't want to say it's an automatic trade, but you just really know. And then you see in here the stacks, the multiple selling imbalances. Obviously, we got the negative deltas. The max deltas are 0. So this market's about to fall over again. Whatever buying that you had earlier is probably going to get overrun, and the market's going to make those new lows. So order flow analysis, in my opinion, provides the trader advanced information that they need to get an edge over other traders. Remember who you're competing against, all right? It's not always yourself. You have to have the mental aspect down, but you're also competing against other traders, because when I don't even like to use that term, competing against, basically you're trying to take their money and put it in your pocket. Okay, so what you want to do is you want to have an edge over them, and you're going to get an edge over them by looking at things and understanding what's happening in the market that they're not even considering, right? They're not considering where value areas are right now in a bar, you know? They're not considering where points of control is, what delta is doing, what imbalances are doing. Most traders are looking at normal bar charts, right? So you want to see what other traders don't see. Now, again, this was that low down here at 70 and a quarter, right? I've showed you this one a few times today, right? You got multiple imbalances, you're selling off, just, as you would expect. Selling imbalances, negative delta starts to rally up, right? But then when you add in the value areas, right? When you start adding in the imbalances, right? You can see it in here. Now this one, it opened right on the value area high, traded 5 contracts into the value area, and then closed up. But you got that big gap there, right? So hopefully by now you can see how powerful order flow analysis is, right? Don't overcomplicate trading, right? Again, everyone, I want to take this indicator. People have this thing called what I call indicator stacking. I'm going to put 10 different indicators, so that's going to give me 10 times a better chance of being right. Well, actually, no, it's going to give you probably a 90% chance of being wrong, because there's going to be one that's right, everything else is wrong, and you're spending a lot of time looking at everything that's wrong. Just trade what's happening right in front of you. Is buying coming in? Is selling coming in? Right? And that's where having good software is going to help you, right? So if you found this helpful, you're going to really like my Orderflows Trader 3.0 software package, which makes order flow analysis super easy, right? And again, it's the Orderflows Trader 3.0 for NinjaTrader 8. It's the volume footprint chart with 17 pre-programmed order flow tools. I've just talked about the multiple imbalances, the value areas, and imagine you got another 15 other tools that you can use, right? There's POC tools, there's market weakness, there's market sweep detection. There's a lot of tools that you can use. And again, I said get my chart template, but actually the way the software is set up, it's set up for E-mini 1-minute chart, so you could go and modify it from there. If you use a different type of chart, just let me know and I could guide you. And normally I sell it for $8.99 on my website. But again, having order flow software is one thing. You have to know how to use it. So I don't just give you the software and say, here, go figure it out on your own. I provide a lot of education and a lot of training on how to use the software and how to read the order flow using the software, right? Now, each week I do a private live group training session, Tuesday nights at 7 p.m., just for users. Now, if you can't attend, you can watch the recording. And, this is your chance to have me, look over your trades, ask me questions about the software, or, hear me talk about interesting things I saw in the order flow recently, or talk about, some of the tools available in the software. And, I've been doing this for over 2 years. There's over 100 and I think now 120 sessions. Some people are going to charge you extra for this. I mean, I don't understand that. They charge you thousands of dollars for their software. Then they charge you on how to use it, right? And, I think that's really what separates what I do from other people, is because, I want you to succeed. I just want to sell you software. I want you to understand how to use it and become successful at trading. So I also offer you for free my order flows trading course. And, I normally sell this for $297. You're going to get access to it for free, as well as this video series that I did of 56 videos a few years ago of my Inner Circle series. And, this was a special thing for users of my software. There's 56 videos on advanced order flows, tricks, tips, analysis, how to use, so what to look for in the order flow and things like that. And if you start adding it together, it comes out to, over $1,600, almost $1,700, $899 for the software, $297 for the training, $497 for the Inner Circle. Add in the weekly group training, which, is probably worth more than $200 a month. Its price starts going up there. But again, you're not going to pay that, right? And I even got a special bonus because of InvestorExpos keeps having me back. My order flow playbook, right, with 10 trade setups in there that you can use to start applying to your trading. And we give you that for free as well. Normally it's $297. So you add all that up, it comes out to almost $2,000, right? But you're not going to pay that, right? Success comes from learning, training, instruction, and practice, right? So if you're interested in the software and all the training, it's just a one-time payment of $749. Go to orderflows.com/oft3.html. Right? It's going to take you to the page. There's no more payments in the future, right? I'm not going to charge your credit card and keep charging you every month like some people do that you can never cancel. Just a one-time payment, $749. Go to this page, orderflows.com/off3.html. Looks like this. Download. Scroll down. Takes you to this button. Click here to buy now. Takes you to PayPal. PayPal processes it. I don't get your credit card information. I don't want it. PayPal handles all that. So if you stuck around, you want my book, go to orderflows.com/book.html, enter your name and email address, click submit, and it'll take you to the download page. So most important piece of information I give you is get started, right? You got to get started if you want to be successful, right? If you just sit on your butt for a year, you're never going to reach any sort of measure of success in anything, whether it's trading or professional career. So get started. Go to orderflows.com/oft3.html, and I'll see you guys on the inside. So thanks, Anna. I'll throw it back to you. So have a great day, everybody.
Thank you so much, Michael. Thank you, Michael. And let's move to our next presenter, Bryce Headley. Good morning, Bryce.
Good morning, Anna. How are you?